Welcome to a Purple Chips web update for Tuesday, August 21st. I'm John Schwinghammer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. The information contained in this presentation is based on the criteria of the Purple Chips model and is not intended to be a solicitation to buy or sell securities or investment advice. This presentation has not been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Stocks can be risky and you should consult a professional before investing in the stock market. Today what I'd like to talk about is talk about Baidu, which we sold last week. We're going to mention Staples, Aflac, Oracle, Stryker Corp, Teva, and Global Payments. On Baidu, we have a valuation reset. Staples is still on watch. We're losing a little bit of money on that transaction. We paid $13. Aflac, we're making money. Oracle, we're making money. Stryker has moved up from where the place where we bought it. These things are going according to plan. Teva and Global Payments are still very attractive low valuations. Let's move into the charts. The first company is Baidu. What we see here is, in fact, I want to point out that we had a valuation reset when the stock went down to when it went down to 100 over here. That was in effect a valuation reset, because if you looked at the earnings back then, in effect you had a lower valuation than any other time in the last 10 years or so, or 7 years, since the beginning of the company, since it was public. And that tells us that when you have a new low valuation like that, then you should only attempt to break even on your transaction if you're already in it. And so we did exit at 133. And today I noticed that the stock is down $7.60. We're at 123.22. So obviously that confirms that we made the right move. But we ended up selling at 132, 133, which was a nice thing to do and following the plan. In the case of Staples, we own the stock at $13. It has moved down, and you can see on this chart that this is the lowest valuation that we've seen in Staples since the beginning of its history as an IPO, and going back to 1992. And what I expect is that the stock will stabilize and probably get back into the somewhere around $17, $18. So I'm not concerned about that yet. We don't have any reason to get out of the stock. It's still there hasn't been a break in the earnings trend, and I think ultimately that stock will be okay. So that's it on Staples. On Aflac, now I'm going to talk about the companies that are doing pretty much according to plan. On Aflac, we had bought the stock when it was in the low 40s, and we're currently trading at 46.50. So the stock has moved up nicely since we bought it, and we still expect the stock to get easily into the high 50s. This is a good quality stock that has all the hallmarks of a purple chip. Oracle, what I'm looking for is a continuation of the trend that we have in Oracle. We bought Oracle in the high 20s. I believe it was around $28, so we're currently trading around 32, and we expect Oracle to be worth somewhere around the 37 mark. And as you can see, I'm moving the EPS line here, and that would be consistent with previous highs that we saw back in 2007 and in 2011, early 2011. So if we were trading up around $38 or so, that would bring the earnings per share line up there, and you can see how that actually follows with the previous high valuations. In the case of Stryker, SYK, we recently bought that at 51, and the stock is now trading at 54.28. And I would expect the stock, it's going as planned, and it should get into the high 60s sometime in the next 18 months. So there's no change in the plan there. And with Teva, this still strikes me as the bargain on our screens. As you can see, it still has a very nice earnings progression. That's doing very well, and the stock is tremendously undervalued. It's still trading under 41, and I think eventually we should see this stock trading somewhere up in the mid-50s. In the case of the last one I'm going to talk about, is Global Payments, a credit card processing company, and you can see that this company is currently at its lowest valuation ever in the last 11 years and has a very nice earnings progression. What I'm expecting is that we should get up somewhere in this zone here, so a $55 target or so, and that should be conceivable within the next 18 months. And that's all for today. I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.